On today's episode of the AI Investor Podcast from 24/7 Wall Street, we'll break down DeepSeek's potential impact on the AI landscape and answer the ever-important question of, so now what? All of that and more is next. Welcome to the show. I am David Hanson, joined by Eric Bleeker. Eric, last week I joked that we and our many companies in our portfolio had been invited to the cool kids table. This week, we've had our lunch money stolen and shoved in the locker. So what's going on? This is maybe, we always joke there's a lot of developments in the AI space every week, every 2 weeks. This seems like the biggest development we've had. So that's obviously where we're going to start today's show, talking about DeepSeek, the story that grabbed everyone's attention over this past weekend and spilled into the market on Monday and is kind of still reverberating through the rest of this week. So let's start there. Everyone wants to hear your thoughts. Where do you want to kick it off?
Do I look like I've aged, David?
A little bit. You were on vacation, but I don't know if it was restorative.
It's so interesting. We get to see, partially because of the portfolio component. A lot of podcasts, you just get downloads for a few days, especially if you're about sports, and then it kind of stops. We get to see a tale of people kind of discovering the AI Investor Podcast because, they're coming back to hear about the portfolio, how we built it. We can kind of watch people move through. I can only imagine, David, the people going from 500 billion Stargate to the next week, absolute panic.
The death of NVIDIA, maybe? That's quite a reversal.
So, you mentioned it, but the portfolio last week we had talked about was up around 55,000 on $225,000 invested. We mentioned 19 of 20 positions were in the green. Today, it's a very different story. Monday erased everything briefly. We actually went back to negative. I looked right before we filmed. We're about $27,000 up, call that 11 or 12% on the capital that we've invested. So we've rebounded, David, but there is a ways to go. Personally, in my portfolio, which includes other holdings, I'm back to an all-time high. I assume a lot of people are. So, we have seen significant bounce off the volatility, but it's probably going to be elevated for a continuing time. So last week, we dug into Stargate and we said, hey, there's a lot of PR around this, and you should not take that $500 billion number at face value. And David, this week, we're going to be unwinding the PR on DeepSeek. So yes, we want to accomplish a few things today. We want to succinctly answer what DeepSeek is and what's not. You've probably been inundated with thought leader threads on social media takes. We're going to talk about why the market panicked and, whether or not we believe that was the right reaction. And second, we want to talk about how this impacts our investing going forward. What happened in the short term, how we see this impacting in the long term. And we're going to make some portfolio adjustments, largely to help people kind of tolerate volatility in the future because, this was an extreme moment, but as we've said since the beginning of starting this show, there's going to be a lot of volatility on what we believe to be an upward path, but it is not going to be always straight to the right. There's going to be some peaks and valleys along the way. So, David, let's just get started.
Yeah, I mean, you kind of have to laugh at the irony of Stargate at 500 billion to obviously we'll get into the headline number of, hey, did DeepSeek only need 6 million? That's quite a gulf. The difference between 6 million and 500 billion is you can't even describe that. So, but yeah, I mean, to your point of thought leadership and Twitter, it felt a little bit almost unusable this weekend. Everyone was jumping in, even people who, maybe don't really know what they're talking about with the AI landscape. Everyone's jumping in. I was in a restaurant on Monday night and the local news was covering DeepSeek. Normally it's like, hey, local man clears his driveway. And now it was like they were covering DeepSeek. So it really was everywhere. So let's just start with what is it? And is it really that big of a deal to investors? And was the reaction warranted that we saw this week?
Yeah, well, we have talked about DeepSeek on this podcast before in our 2025 preview episode, which was before the models were released that started the market panic. So I think it'll be helpful, David. We can give this a listen. This is from our January 10th episode, starting at 25 minutes and 30 seconds. And this specific section was talking about the risks I was most afraid of in 2025. All
right, let's take a listen.
But there's also a possibility there's a Chinese company named DeepSeek that's showing off a model that they've kind of let's call a spade a spade. They've copied a lot of things from US companies to be able to achieve building this model for significantly cheaper. But there are some futures where even with AI progressing, there could be optimizations around models in different areas where it just doesn't require the intensity of NVIDIA chips, the intensity of networking. And that could lead to a situation where even with even with AI advancing, the particular stocks we're picking are not advancing. So when I think about risks, those are the 4 risks. You can tell I was like, I've got 4. You didn't ask me this question before. I have these in my mind at all times as I'm analyzing the market and considering which stocks to buy. Okay, so the question everyone should be asking right now is, how did we kind of predict DeepSeek would be such a risk? Weeks before this massive market sell-off that all happened in one day. Well, I think, David, we need to walk through a timeline a little bit here to establish what's going on. So we had DeepSeek V3, which featured most of the innovations in that $5 million training number that the media is so focused on. That was released on December 26th. So my reaction in that podcast was actually to V3, but the problem was when that was released, it got 1/1000th the media attention. It was observed in AI communities, but in the broader media in the stock market, there was almost no reaction to it. So what happened was on January 20th, not so coincidentally, the day of Trump's inauguration, DeepSeek released R1, which was taking V3 and building reasoning into it, which we'll talk about more later. So the paper for this was submitted on Wednesday, 22nd. Now, here's what's important. Was there a market crash on Thursday, January 24th? No.
Not that I remember.
Was there a market crash on the 25th? No.
Nope.
And, David, I know it sounds like I'm like walking through the Kennedy assassination here step by step, but the details are important because this was one of the more bizarre sell-offs I've ever seen. I was on a trip, as you mentioned earlier. I'm in Panama. I'm sitting on the pool on Saturday, and suddenly every post I see is about DeepSeek, and suddenly messages I'm getting are from people sending me things like the bear report saying how NVIDIA is doomed. And I really realized something was coalescing, and it just seemed to build over the weekend. It was really spurred on by some of these narratives and social media. So, David, what we had was focused. It was almost a mania of selling that almost developed around, let's call it what it is, engagement bait across places like Twitter. So we need to talk about why DeepSeek itself is such a powerful topic that was able to kind of coalesce and turn into something that crashed the entire AI market on Monday. First of all, it's Chinese. If this model had come out from an American company, the reaction is significantly more muted, because last week we talked about how Stargate, that $500 billion number, is kind of PR packaged up for Trump's inauguration. Well, if you think that DeepSeek was just entirely coincidental that R1 came out on his inauguration date, let's get real here. So it stokes a lot of fears about America falling behind, and everyone in social media was doing the down thread, read about how this is America's Sputnik moment, right? It's packaged up to be salacious. Second, DeepSeek is open source. Now, OpenAI's name is famously OpenAI, right? They started as open source. They moved to for-profit. There is a lot of debate and kind of, let's call it what it is, like hard feelings in the AI community about open versus closed. And a lot of people are upset that a lot of the leading American kind of frontier models in OpenAI, Anthropic, XAI, they're all not open. So again, this presents a juicy narrative that these companies that are spending tens or hundreds of billions are all of a sudden falling behind. And third, David, I would just say people have been looking for an excuse for the AI bubble popping. Most people reacting, if I'm getting someone sending me a tweet from the Bear Report It's not saying buy NVIDIA. It's an opportunity. This just gave a huge opportunity for people to confirm their prior. So, David, I think summing it all up, we had an environment that was ripe for something to spin out of control, let some air out of the balloon, and everything just kind of coalesced around DeepSeek, even though most of kind of the major innovations people were focusing on had been public for a month or more.
So those certainly make sense to me. It's almost as if you went to an AI and typed in, hey, give me some aspects of what would cause a market panic. It'd be Chinese company, open source, and the company that is most associated with AI and AI spending, NVIDIA, are they suddenly in trouble? So definitely a combination, a powder keg of things that can potentially go wrong, cause some panic. And to your point, we've had an incredible run. People maybe are looking for a reason to sell, to get off the train. And obviously there's, it feels like in the last 15 years since the financial crisis, there's a bit of a glorification of, can you be the person who's going to identify, this is just the start and something much worse is coming. So I think everyone's very quick to try to capture that and sell and say, yes, this is going to be this is the start of the .com 2.0 crash.
Yes.
But let's maybe say, okay, maybe some of these are overblown. Does DeepSeek really change things? Because it does seem like there's something going on here, even if that $6 million figure that I know we're going to get into is maybe not entirely accurate. Again, it's so far from that 500 billion. So what has really changed here? And it seems like the narrative isn't going to go away, that there might be a new way of approaching some of this AI training and how these models are developed.
Yeah, there's definitely some interesting aspects about DeepSeek. It's why we highlight it as one of our greatest threats in that episode we played the clip from. So that being said, David, a lot of the threats, they've been, let's just call it exaggerated. So let's break it down. The headlines around DeepSeek is its efficiency. It introduces new innovations that make it cheaper to train or run, that's inferencing these models. We'll dive into the details more later, but some of the headline figures that you're seeing in a lot of these tweets and media articles, they are staggering, such as an API that's somewhere between 10 times or 20 times cheaper per token against comparable models for an open AI like O1, and training that's reportedly up to 50 times more efficient. Of course, there are huge caveats to both of these numbers that we'll go into later. Because in isolation, David, they just look terrible for US companies, right? It's kind of like, wait, we're giving these companies, these AI teams, tens of billions of dollars in funding, right? We're spending hundreds of billions of dollars on NVIDIA GPUs and data centers. And have we just been asleep at the wheel, spending like drunken sailors? So that's a narrative that you are seeing a lot online. And let's kind of deconstruct it just a little bit. So for argument's sake, let's say DeepSeek's breakthrough makes it 10 times more efficient. In isolation, that feels like a staggering number, right? If in most markets you get 10 times cheaper, you've won, right? That's game over. So I've seen a lot of people online say something to the effect of, say the price of oil drops tenfold. Are you going to suddenly use 10 times more oil? That's kind of the line of argument that then goes to a next level of, once the hyperscalers achieve these savings from DeepSeek, of course, they're going to need a lot less NVIDIA GPUs. They're going to spend a lot less on their data centers. Now, what we need to do is we need to put this in context, because we're living in a world where 10x cost reductions are kind of the norm to a staggering degree. I don't think just about anyone has internalized in their head. Here's an example. Andreessen Horowitz, one of the top VCs, they ran the numbers that from November 2021 to November 2024, the pricing on inferencing, which again, running the AI models, dropped by 1,000-fold. Now you might say, how is that possible? Well, we've got the chips and the hardware. NVIDIA, when they ran the numbers in 2023, said they had increased the performance of inferencing by 1,000-fold. And their future ambitions, as we've talked about with them accelerating schedules, are even higher. And they're only part of the equation, David, because we also have the software side, the algorithmic side, which is what DeepSeek has been optimizing. And Anthropic CEO Dario Amodei said he believes algorithmic progress, again, where DeepSeek had their breakthroughs, is achieving 4x reductions in costs annually, and that 10x reductions, similar to what DeepSeek may have achieved, they're not common, but they're certainly part of this process that happens. So now, if we look, David, at that broader perspective and say inferencing costs dropped 1,000-fold in the past 3 years in many cases, what happened to demand for NVIDIA GPUs across this time, right?
Off the charts. Yeah.
They're off the charts. And what happened to the plans for data centers? They're off the charts. So when you frame your context, does it seem like a breakthrough of this magnitude should cause a great panic? And the answer to that is no. Mm-hmm. And simply put, what we're dealing with a little bit, David, we've both worked at times in marketing around financial services. What you use to get people's attention is an out of context large number. Some markets could grow 30x. Well, once you have context, that might mean the company behind the trend actually only grows 5. But hey, you get the 30x for attention. What DeepSeek did is it had a lot of out of context large numbers that look impressive, but they're a lot less about shifting an entire industry paradigm, which is what the articles, what the thought leaders are saying, and more of just kind of an excellent example of the way this industry's been kind of operating for a continuing amount of time, right?
Well, we've made a pledge on this podcast not to get too nerdy, not to get too technical in case anyone's driving. We can't have anyone falling asleep at the wheel. So I do want to talk a little bit about what are they actually doing that's different. Again, we can talk about the marketing and the $5 or the $6 million. We talk about a big number. They almost used a small number to get people's attention in this case. So what are they actually doing differently if there is some sort of breakthrough here happening with the methodology that they're using?
Yeah, we violate this pledge almost every podcast, but
try not to.
Details are needed. And there are some impressive aspects of what DeepSeek's doing, make no doubt about it. So let's deconstruct a little bit. So if we go back to May of last year, the company released their V2 model, which again shows how far back a lot of this information has been out there.
And also how long this company's, there was a narrative that's this was stood up last weekend in someone's garage. It's that's not the case, but that's the feeling that many people
Three
have.
College kids in a Chinese dorm room.
Exactly,
right?
Yeah.
So we've talked on this podcast about parameters and AI models before, and a really simple way to think about them is each parameter is a weight from 0 to 1, and this number is just in training, but it's done in the count of hundreds of billions flowing through into trillions. Now, more parameters has generally meant more capable AI models, but also leads to a lot more calculation, needing more computing power, needing more NVIDIA GPUs. So I think companies have known for a long time and have worked around optimizations on kind of how to be more efficient about keeping this compute cost down. But you have to consider we're in right now what's a bit of a race towards AGI. So let's say you could take your compute down. These are just illustrative numbers. Your needs for compute down 3x, but your model was 20% worse in the process. Well, that's when you're in an arms race and you're trying to get the best leading edge models, that's not a compromise you generally have wanted to make. So what DeepSeek did with V2 was it broke down these very large models into smaller segments, what you call experts, but it did so a lot more efficiently. So you can activate a lot fewer parameters and still get very good answers. So you combine this with some other innovations they had, specifically around memory usage, and it created a path towards training and running models more cheaply, again, without the compromises in performance that we have seen in the past. And these innovations, David, that led to that $5.6 million training number, which once again, that was announced in December. It's not even part of this recent announcement. Now, did this model actually cost $5.6 million? There is a definitive answer. No. Just last night, Semi-Analysis, which I've talked about them, I sing their praises. They are the best researcher in the space. They dropped their analysis on the true cost for DeepSeek's newest models. The research shows DeepSeek spent more than $500 million in GPUs, all in a college kid's dorm room, 1.3 billion in capital expenditures total, and closer to 2 billion when you actually total up the costs. So that $5 million number, it's for a marginal training run that excludes all R&D costs, training beforehand, overall compute infrastructure. You get the picture, David. And we'll get into another major cost that was excluded in a moment, but I did want to just kind of pause here to take a breath because that is a lot.
Yes, well, maybe couple billion, couple million. There's a lot going on here. But if someone's sitting around and their friends ask them, so like, what was going on with this DeepSeek thing? Is the easiest way to describe it is it was not just $6 million or $5 million. This is not a ragtag team of, again, someone in their garage. This is some of the brightest minds in China who have been working on this problem for longer than just a week or so. Is that the best way to kind of describe that? What's going on here?
Yeah, that's entirely correct. It incredibly capable with vast amounts of resources. But we do also need to talk about the other breakthrough that's attracted a lot of attention. And David, because it ties into what we've been talking about in recent podcasts, we've been talking a lot about reasoning. To review it briefly, AI models can now think about problems by inferencing or running the model to create, we've talked about this in prior podcasts if you need to review, but a chain of thought. Now, this not only provides far better answers, but creates a new scaling paradigm because it creates data that you can use reinforcement. You can use reinforcement learning to make the models significantly better. So it's kind of working in multiple dimensions here. Now, it's the growth of reasoning that we've really been leaning into because it's our belief this is going to create a wave of progress that's going to catch the broader world by surprise. It's important to note we're really early into reasoning being kind of a new dominant paradigm. The model that brought this to the masses, that was OpenAI's O1, that was announced in September. It was only released to users on December 5th. The model that blew everyone's minds that we talked about in our January 3rd podcast, that was OpenAI's O3, I should say. That's the one that can, code better than 99.95% of human coders. So this is brand new stuff. Mm-hmm. So DeepSeek's newest model, which is R1, it takes those efficiency breakthroughs we've talked about from V2 and V3 and it adds reasoning. So you have a fairly capable reasoning model following up closely on the heels of these OpenAI launches, but it's significantly cheaper. For simplicity's sake, let's say it's tenfold cheaper than OpenAI with models that just released in September. So we do have a major milestone in creating a very cheap model that seemingly jumps the progress of leading American, open source models like Llama. But again, here, David, this is where I need to pause for a moment to kind of bring out some of the nuances where some of these headlines in the media might really be doing a disservice to people. Because when it comes to why DeepSeek was able to catch up fast after initial reasoning launches, it's being in China is an asset. The reason that OpenAI says they have evidence of them distilling their models is because, they're able to see this from Microsoft, which is they're essentially using O1 to train their R1 model. So if you're a company in America, distillation on this scale of another company's model, it carries tremendous legal liability. It's against the terms of service. But if you're in China, you get a pat on the back. You get billions of dollars for doing it. So love the progress of R1 itself. It appears to be a legitimate breakthrough, but it's more of an ability of Chinese companies to be fast followers on distilling down these reasoning models. And for that reason, my expectation is in 2025, you will see a lot of American, especially an open source model like Llama, be able to catch up, especially in reasoning, because it is, this is so new. So let's pause here for a second. I know my head's spinning a little bit. I'm trying to capture all this and present in a way that people can follow. The costs used in the media of DeepSeek's new model costing $5 million, they also do not include any of the costs around reasoning. So reasoning is powerful. It is a new scaling paradigm, which we've talked about. It's going to require significant compute, and it's going to, over time, become a dominant cost structure in building AI models. And I would say, David, we are only we are like 1% of the way on this path. And this is why DeepSeek itself has said their number one constraint is export restrictions. They want more compute. And it's why China, they just announced their own equivalent to the CHIPS Act and Stargate, where they're going to provide $137 billion in funding to AI, companies to get more compute. If anything, R1, which is the model that came out on Inauguration Day, which spun up this current panic, it is validation how much we're going to need to continue pushing reasoning to get to AGI levels, which is why someone like Mark Zuckerberg, in the wake of this news, he didn't cut his capital expenditure plans. He took it up to 60 to 65 billion next year, which was above consensus just a few weeks ago. This is why OpenAI is partnering with Oracle and SoftBank on Stargate. They see the beginning of this new curve. They see the power that, frankly, it leads to AI recursively learning or training itself. And I don't think, David, anything in the past week changes this trajectory. If anything, frankly, it accelerates it.
Well, you talk about the trajectory, and there's kind of that. What's that chart people use? It's like what success actually looks like, and it's bumpy along the way, and it's not going to be just here's the path, and for the next 2 years, it's going to be a smooth sailing. So we've said that on this podcast to expect some volatility and things can change, and that's obviously what we've gone through. We're almost 30 minutes into this podcast. We're an investing podcast. I'm sure people are like, cool, DeepSeek, but like the stock that's down 40%, should I be buying now? So based on what you just said of not really changing the trajectory, a lot of our companies in our portfolio, down huge on Monday. I think Vertiv was down, 35% or so.
Plus, yeah.
Credo, same thing. Now we're recording this on Friday. Things have bounced back a little bit, but as people listen to this, should we be seeing this as a opportunity to add more to the companies, or how are you thinking about, such violent price changes, and what actions might investors be thinking about taking here?
Yeah, I think there is one important caveat that I do want to touch on, but from a technical standpoint, the results of DeepSeek's recent releases are that models are cheaper to train. So, you're not going to take all those cost savings and just pass them on to the hyperscalers, right? I believe this allows companies to train more models faster, reduces the risk of massive training runs that, if you have kept extrapolating, could have cost billions, taking a long time and not producing desired results. So this is good. This is a net positive to the industry. Now, here's the caveat. There's a behavioral game, David, right? We've talked about this in past podcasts. We talked about this in our risk for the year. There's two catalysts for AI spending. One is coming from actual ROI and usage, right? The other one, FOMO, baby, fear of missing out. We are in an arms race. The end point is AGI, and it's something technology executives, they see as a existential risk, right? So that second part, that arms race, it's really led to an environment, especially across the past year, where companies are rewarded for taking capital expenditures up, right? It's better to say you're spending more because you are the bigger innovator who are thinking deeper, than your rivals.
Well, and many of these companies have been so successful, Microsoft, Meta, Amazon, they've gained investor trust, the managements of, they must know what they're doing. So yes, to your point, adding more and more billions, it was, they've been successful in the past. Maybe they'll be successful here. So yeah, they've definitely been rewarded, even if they're taking cash flow away from shareholders and putting it back into the business.
Yep. And I can see what I fear is a little bit of a potential break in that narrative, right? Because this panic, it's all about efficiency. It does give companies kind of cover fire to scale back. I'm watching Microsoft. That's a company that in a way has kind of tapped out, right? They don't want to fund OpenAI's most ambitious plan. So OpenAI, when they got SoftBank and they got a Middle Eastern company, sovereign wealth fund, I should say, to kind of fund their most ambitious plans. And Microsoft said they're going to keep capital expenditures flattish over the next 2 quarters and reduce the rate of spending growth in 2026. Now, David, this is to be expected. The consensus for the market is that we will see spending coming down.
Of course, the numbers get so large that
you can only get so large.
Yeah.
But when we had started the podcast last year, around August, at the end of August, the big fear was what capital expenditures look like in 2025. So as consensus went up for that, all of our stocks did well.
Mm-hmm.
And now the uncertainties in 2026. So what I'm watching now is how some of those spending decisions are playing out. And I think what we need to watch now is we've got a next generation of models coming from XAI, Anthropic, OpenAI. These companies are all spending aggressively on their targets. How is that perceived by the market? Also, how is the market treating companies that aren't being as aggressive in spending? Microsoft, they just released earnings this week. They dropped 6% afterwards. And a reason was they kind of said they are constrained in being able to kind of drive growth rates in AI, which drives their cloud computing. So, in a way, they were punished for this. But David, regardless, the important thing to know is I believe this does present an opportunity for that narrative to shift that introduces some of the more, riskier situations in the data center kind of stocks that we are heavily concentrated in. So as I'm looking forward, I do want to be opportunistic about what stocks we're buying, but I also want to continue to diversify so people who are buying stocks in this portfolio can succeed from the upside of AI, but they can sleep easier at night and not worry that they're going to wake up tomorrow and have their whole portfolio down 20%. So, right, we're gonna address that a little bit today.
Yeah, I mean, we've noted on many episodes that many of our stocks have just done so well on earnings. Everything was jumping. I think literally on the Friday before I was looking at my portfolio, I was like, man, I'm almost up 80% on Vertiv. I should have bought more. Monday log in down 35%. I should have bought less. So, it's always a gut check to see any of your companies down 30%. It's not uncommon for, riskier, smaller companies to do that. To see it in a day across the board is certainly something that you don't see often. You can think back to March 2020. We saw a lot of that, of companies down 30, 35% a day on COVID, but we don't see that very often.
Yeah, I think that COVID comparison is really interesting. David, I know it was a blur. You and I, we had hosted a webinar in late March 2020 for Motley Fool. I think we both had daughters running around our legs, right? It was a weird time that you could almost never even put your head back in, but there's a lot of fear. And what we had seen was a dramatic drop. And the question was, are we going to see a V or not? And, we had tens of thousands of people sitting on our webinar, and, we gave advice that was really good at the time. And I do look at the situation, and I kind of say, how could this compare to COVID? Because, one of the stocks we talked about last week was Celestica. It was a potential Stargate winner. We had talked about it. It then one stock I said I've been looking at, but the valuation was a little high. On Friday, it was trading for, let's look, $122 per share. It was down to 87 on Monday. Now we're back to 127.
Wow.
So if you're missing any of the names that we've talked about in this portfolio in the past, the reality is for most of them, you are going to be able to get it cheaper than you have recently. Vertiv, you mentioned that one. That took a sharp haircut. Optical names have fallen quite a bit. You look at a company like Credo, it went from 85 to 55 in a day. So if you are missing some kind of zones, we've talked about how all of these different stocks fill into strategies that we're pursuing. You're going to be able to get some of these companies for cheaper. But I do want to think not just about buying some companies that are increasingly becoming slightly cheaper than a week ago as we see a rebound. And I want to take this moment to kind of position the portfolio for people's success and minimizing some risk, because we are really concentrated into this data center trade. So we've had about 250,000 in invested capital counting last week. What I want to do right now is, so we're going to do some small buys. We'll add $5,000 of Fabrinet. I talked about that in the prior episode. It's reasonable valuation. I think it's mid-20s P right now. It's got a lot of cash on its balance sheet. It's got a really good opportunity in some of these new areas. Data center spending's moving with its data center interconnects. We're gonna add that as an opportunity. Credo, we were talking about before we started filming, David. What is it up to now? I am so annoyed.
Do you really want to know?
I don't know if
we're up almost to 18% on the day.
18%, my God. In the wake of everything happening, I have wanted to add Credo, but man, it has taken off in the past couple days. We'll sprinkle in 2,500. That will be my compromise, because I wanted to do some smaller bets on high flyers as they have been kind of taken out. Because what we saw with Celestica, they went all the way down and then they report earnings and all of the spending's locked in. If this is a threat into 2026, you're still going to see some rising expectations throughout the year. So we're going to do another podcast pretty quickly because there's so much to cover right now. Maybe we'll do it early next week. I'd like to look at some of the other high flyers like Astera Labs or some companies we've been circling, but they've just gotten so expensive and look at whether or not it's an opportunity. But here's the bigger picture, David. I want to take $100,000, invest it in a single stock, and I want to do that twice. And I want to do that to Amazon and Meta. Those are big positions. It would be 20% of the portfolio. Our highest current allocation is Broadcom. In the past, I'd said I own a lot of hyperscalers personally. I wasn't doing in the portfolio, partially because, most people have already made a decision whether or not they're going to buy those. These aren't exactly under the radar. But from a portfolio perspective, what I love about these companies is if you have another one of these freakouts about efficiency or some kind of breakthroughs, or these companies are deciding to take their spend down, that's generally good for them. Because if they have the capability to take their spend down, it's good for them. It's bad for the rest of the portfolio. What this does is it kind of hedges days so that our chance of seeing another day where the entire portfolio is down 20% is going to be dramatically reduced. What I can also do then is I can sell off some chunks of either Amazon or Meta to fund buys as we keep moving the portfolio into new areas. Now, final point here, David. How long are we? 36 minutes. Hey, for as much time as we spent on DeepSeek, we've done good. We're going to end this on time today. I saw the sell-off on Monday, and the first thing on my mind was, I bet people are going to start rotating into software stocks, right? And we've talked about this. We want to build a strategy around software companies that are going to benefit. It's just we're very early.
Right.
We're starting to see a lot of developments into agents right now. It hasn't been clear exactly which stocks are going to benefit from this versus be potential victims. I want to add one company today. That's Cloudflare. It's a leader in web security. We use it a lot in our own business. We understand the value from it. They also do things like denial of service mitigations. And what you're going to see and what the narrative is going to be across 2025 is the rise of agents potentially becoming the majority of web traffic. I think of any company whose services become more valuable in a shift like this, Cloudflare is near the top of it, right? So this is not a cheap stock, and it jumped 10% on Monday, but I do want to add $15,000 to this idea. And I want to do that just so that we can start building a stronger sleeve of these kind of agentic plays. Now, on the next AI Investor podcast, which I think we'll probably do early next week, we need to look at the impacts on a lot of these companies, right? How is DeepSeek and potential controls, stronger export controls impact NVIDIA? We had Broadcom jump after Meta's earnings because Meta said they're going to start replacing end-of-life NVIDIA equipment with their custom chips from Broadcom. Taiwan Semiconductor, they fell after the news on Monday. I'm like, this is kind of crazy because if one of the main outcomes from DeepSeek is that it's so efficient, you can run these models on the edge, that's going to lead to a super cycle in PCs and smartphones. That's probably going to lead to stronger profits for Taiwan Semiconductor. I was like, this is just illogical. And we'll also look at some of the opportunities around those stocks that are still down 20% or more. And if we want to opportunistically add a few more names. Also, what I want to do is I want to give a few more ideas of software stocks, because again, we are probably underweight that category and we're trying to add to it. So David, that is going to be a show chock full of news. If today was a little more DeepSeek than you wanted and you just kind of want the stop talk, we're going to get that on the next show. But I think DeepSeek, this is maybe the number one story in terms of media traction I had people I haven't talked to in months texting me, asking me about it. It clearly captured something in the cultural zeitgeist. So we wanted to just take some time to really let marinate and walk through, the full implications of it, because again, I think it should be clear to anyone who's, listened to the show today. My beliefs about its implications are dramatically different than most media coverage, right?
Mm-hmm. Yeah, well, to summarize those, the moves you just made in the portfolio. So we're adding to Fabrinet, adding to Credo, despite its 18% jump today.
Killing me. Oh.
100K each on Amazon and Meta, and then Cloudflare, a new company coming into the portfolio. And I agree. Obviously, the software stocks are, if you think about the cost of AI, again, we've talked about this $5 or $6 million number, and maybe that's not accurate. But if the cost continues to drop to create models, have new services, that does open up more companies to be able to try more things with AI. So we've talked about being early on software. Maybe that this is the start of some new opportunities there as people start to becomes more viable for companies to take part in the AI race. But yeah, I think it's going to be interesting to watch our smaller infrastructure plays. To bring it back to the COVID example, the very early COVID, the big fear was the shift in demand, right? We had a huge demand shock, and demand went way down in many industries. And then demand went way up, and we were supply constrained because companies shut down. So it's going to be interesting to see, how do these smaller companies adjust their guidance? What are they hearing from their customers? And as we kind of go down the line of AI, I think it made our show more interesting for the next 6 months as we start to hear from some of these companies. I think not that it was getting boring, but you could almost predict what many of these companies were going to say during their conference call. It was like, well, yeah, we're increasing guidance. We continue to see robust demand in the pipeline. Now, it's going to be very fascinating to see how these companies react, and excited to see Amazon and Meta. Anyone who's been sitting on the sideline rooting for those stocks not to do well, it's kind of like, what are you going to do? They do well when spending is high because they've got excess cash flow and tons of cash on the balance sheet. And then if it's, maybe they'll have to cut back on spend, they win then. So it's almost like these companies are bulletproof, probably just jinxed them. But it really is incredible that they almost win no matter which way the wind is blowing in the AI market. It seems like a company like Microsoft or Meta, they seem to be on top at the moment. But as we've seen this week, things can change quite suddenly.
I was going to say, last week we're the cool kids. We get stuffed at locker. This week we're bulletproof. So I don't want to know what happens to us next week. But, David, just one final point here is, this show is constructed for a couple of reasons. Number one, we truly believe that there's a setup for artificial intelligence to be the most impactful trend in human history. And we want people to have a single way to follow along. Hopefully, in today's show, we took a matter like DeepSeek that creates significant confusion, it creates significant fear, and we're able to create something relatively concise that people are able to understand an opinion on it, at least from us. Second, obviously, we would like to give people more knowledge about how to profit from this opportunity. But, I'm just kind of extrapolating from what you said a little bit. For AI to be the biggest trend in human history, it needs to get a lot cheaper. If only OpenAI, if only NVIDIA is profiting from this, it is not reaching its full potential. So I think we are seeing this is just a process of continuing to broaden out, and we'll continue to evolve the portfolio. I don't want to panic sell any of the data center plays because of something that happened. All the same, we are going to shift our portfolio focus over time. If you started in the internet in 1996 or 97, and if you only bought Amazon, just held that, you did excellent. Great job. But if you have just bought Lycos and the fiber companies, you have done very poorly. So I think there is going to have to continue to be an evolution. And hopefully that's part of the service we provide to people, is continually giving new kind of idea flow. But you got to stay nimble, right? And what we're adjusting in the portfolio is a little bit of a reaction to just making sure that people aren't too concentrated into one singular idea, which is this infrastructure build out. So it was scary on Monday, but I think it's going to allow us to continue evolving into something that's even more useful for our listeners out there.
Yeah, I think evolution is the right word. I think it's easy in the game of AI. Sometimes it's tempting to think of it as there's a finish line where it's like we achieved a certain level of AI and then it's over and society will be changed. But I think what we're going to see is it's going to evolve. There's going to be new winners. There's going to be changes. So to your point, hopefully this show can be a resource where you can come and join us on that journey, and we'll try to help you along and give you some stocks to follow along the way. So,
and we'll do our next podcast and everything will have totally changed again.
Exactly. Well, that's all we have for today. If you have any questions, email questions at 247wallstreet.com. We'd love to hear from you. Go on the YouTube channel. We'll post some of these clips, post any questions there. So we didn't get to any listener questions today.
We'll do questions next episode.
We'll get to questions then. So please write them in, leave us a review. We'd love it. And we will see you next time. Thank you. People on this show may have interest in the stocks they talk about. This is not investment advice, so don't buy or sell based solely on what you hear.